Well, that said, let's move to our next management. We have Mr. Vasudevan, the MD and CEO of Equitas Small Finance Bank, who joins us on the show. Hi, Mr. Vasudevan. Good morning. Thanks a lot for speaking to us here on CNBC-TV18. Well, we're going to be focusing on three focal points. One is the objective of the fundraise that they've announced, the universal banking license application, what's the status out there, and the path to meet FY31 ambition. Well, Mr. Vasudevan, let's focus on the first part. What is the objective of this fundraise resolution? Could you tell us how have you arrived at this number of around 1,250 crore rupees for equity? And how much growth runway does it give you?
Yeah, good morning, and thanks for having me here. See, this fundraise resolution that we have put up in the board yesterday, and we'll be seeking the shareholder nod in the coming AGM, is basically an enabling provision. We do not exactly have a plan to raise the money in the immediate term. Our capital adequacy is quite comfortable at 20.6% as of March 26. And, there's a lot of instruments in our hands to preserve capital as we grow. And so this is more of an enabling provision. If you can recall, last year also we had taken a similar approval from the shareholders, but we did not raise tier on capital. So this year also we have taken it as an enabling provision, and most probably we don't intend to use it during the current calendar year. Maybe sometime in the next calendar year, depending on how much we are able to grow and what level of internal accrual we are able to get, we may look at it maybe sometime in the next calendar year.
So we keep this as a date for 2027, Mr. Vasudevan. Let's focus on the other big point. You're also looking to mop up deposits via the new FCNRB 3 to 5 year. What has been the response so far? And, will the FAQs that came out 2 days ago help you in garnering deposits by relaxed credit conditions?
Yeah, absolutely. So that's a great opportunity for all banks, and we are also quite excited. And given in proportion to our size of the bank, we do expect to raise a significantly large amount of FCNRB deposits. We already have about 20,000 NRI customers in the bank who have been placing their deposits under normal FCNRB rules. And so we are in touch with all of them, offering this as a great opportunity for them to create further wealth for themselves. We are currently offering 7.13% interest rate on the FCNRB, the new scheme deposit, 3-year to 5-year deposits. And we have currently about $35 million of FCNRB deposit. And in the next 3 months, we are really hoping to probably double, if not more than that.
All right, double the FCNRB deposits from current $35 million, and over the next 3 months, we'll obviously, keep a check on how much more have you been able to garner from this. But, apart from that, the big trigger is the universal banking license. The bank, prima facie, seems to be meeting the basic RBI criteria. You've spoken about this in the previous conference call as well, and you did say that, maybe you will discuss and deliberate upon whether to go ahead and apply. What have those discussions yielded so far, and by when do we expect the filing?
We believe that we are technically qualified as per the guidelines of RBI. But, there's a lot of other qualitative parameters that RBI would look at when they consider proposals like that. So we are in touch with various divisions of RBI, and we are not exactly in a hurry to, submit our application. So we will continue to discuss it various divisions in RBI and seek their comfort, in terms of what do they feel that Equitas, in terms of its preparedness to be converted into a universal bank. We believe from our side that we are well prepared because, as you may know, the norms of RBI guidelines, most of the guidelines of universal bank apply to SOBs also. And to that extent, we are already, having lots of our compliance and risk and operational risk, factors quite well in place. So we'll dialogue with RBI.
You said you made the quantitative parameters, and there are some qualitative parameters. So if you could throw light on what are some of those qualitative parameters that you're working on, and were this to not happen, would that put a spanner in the works when it comes to your fundraising, growth plans, etc.?
The qualitative parameters are basically the regulatory and supervisory comfort that RBI has over different banks, right? And that is not something which can be spelled out or defined. So that's a qualitative parameter. Quantitative, I think we comply. And qualitative will be in touch with them, as I mentioned. And the SFB to universal bank, there's not much difference in terms of the way we operate. Currently, SFBs are required to have at least 50% of their loans of less than 25 lakh rupees. In our case, we have 73% of our loans less than 25 lakh rupees. So there's no dearth of growth opportunity, or it doesn't impact us in any way. But there will be some positive triggers like reduced capital adequacy, and the fact that I will be able to remove the word small finance from the name, which will be a lot of comfort from a depositor perspective. And so there are a few benefits like that. But otherwise, even as an SFB, our plans of growth, our 2031 plan that we have set out, should not really be in any way impacted.
So this FY31 plans that you spoke about, I think advances of 1.2 lakh crore, steady state ROAs of 1.5%. Does that assume a universal banking license, or it is irrespective of that? And how do you get there? I mean, if you could take us through step by step on how you've arrived at these 5-year plans.
Okay, one is that plan is irrespective of whether we get converted as universal bank or not. In fact, if we do get a conversion, maybe the returns could be slightly better.
And now that you are mobilizing significant deposits from the FCNRB scheme, is there a possibility that you could do better than the advances growth guidance? You have that much more capital that you can lend out. So you had given a 20% advances growth guidance for FY27. Can you revise it higher? And what does it do to your NIM guidance of, I think, 7 to 7.1%, which you spoke about as steady state?
Yeah, I mean, these are still early days, so I'm not going to be able to give any very specific comments on that. But deposit growth, has been a little low on the lower side in the last 3 quarters for us. It used to be always 25% year-on-year growth till first quarter of last year. It's come down in the last 2-3 quarters, but that's something that we are working on. It will come back. So we do not expect deposit to be constrained from supporting growth. And this FCNRB mobilization that we are now seriously working on, it helps the bank significantly from both quantity as well as from an interest rate perspective, because it's cheaper than my domestic deposit. And the second thing is, of course, it will help the country in terms of some level of FCNRB. Though I know that we are very small, but to that extent, we'll still support the country.
So the guidance stays on NIMs and advances, FY27.
Yeah, it stays. Maybe there's a possibility we can do better than that, but definitely this is a conservative guideline, and we don't want to give a very aggressive guidance just now, but prefer to deliver something better than what we talk.
Okay. Very quickly, sir, finally on stress, because last quarter there was an improvement, your credit costs moderated. Has that continued in Q1?
Yeah, so see, basically our microfinance was the one which was causing a lot of stress in the last financial year. The rest of the non-microfinance book, our credit cost was just about 1.1%, which is very much in line with our normal levels. And last quarter, fourth quarter, the microfinance stress actually came off completely and back to normal. And if you see the microfinance industry from 4.6 lakh crores of loan outstanding in March 24, it's come all the way down to some 3.4 lakh crores in March 26. So it's almost a 1 lakh crore of degrowth in the industry, which is a reason why that entire stress has got actually reduced in the microfinance space. And and we also, over the last 10 years, when we became a bank, it was 53% for us. Today, microfinance is just 10% of our book. We have put a lot of effort to reduce it from a concentration perspective. So we believe that our credit cost should really hold up even in the current year at levels which we saw in the last quarter of last year.
3 numbers before we let you go quickly. Advanced growth target once again for this year. NIM target for this year.
Yeah, so advanced growth, as I said, we should look at 20% plus growth.
We'll do better than the
NIM
guidance
target, NIM was 7, yeah, hopefully. NIM was 7.3% in the fourth quarter of last year, but we are guiding for a NIM of around 7.1 for the current financial year, given that there will be some increase in interest costs because we have raised our deposit rates recently. So we are guiding for 7.1% NIM this year.
All right, Mr. Vasudevan, appreciate you joining in, giving us all of those details. Wish you well for the remainder of this year and all the best with that 2031 targets as well. Look ambitious, but you seem to be on the path and taking various measures to reach there. Thanks a lot for joining in. Have a good day as well.